Good morning, class. Welcome to Jogumaya Devi College of Commerce Department. On behalf of the Commerce Department, I am Professor Devdeep Banerjee, and I will teach you certain portion of Financial Accounting 1 in your first semester BCom honors as well as general. So, I like to welcome you all uh, regarding your selected the course for BCom honors in JDC or Jogomaya Devi College, and I will like to introduce with a few things regarding financial accounting 1, which portion I will cover first of all, and then which books I want to refer, or whether you can purchase that these books or not. I will refer that, then I will move on to my chapter of discussion. Okay, so first of all, I want to have a quick idea regarding the portion. Basically, it is an 80 marks written paper, totally written paper. Those who are studying honors, it is an honors paper, and those who are studying general, it is a general paper. Okay, so the portion, the marks distribution of the marks allocation will be one question of 15 marks, which is a compulsory question. Okay, 4 questions you have to answer out of 6, although they will not provide you out of 6 any 4. They will provide you the option like that, either this or that. In this way, there will be a total 6 question, and you have to answer 4 question out of it, and it will carry 10 marks into 4 questions, so it will be 40. And there will be again 5 questions out of 7 you need to answer. Each question carries 5 marks each. So total counts 80, and there will be 10 marks for your internal assessment and 10 marks for your attendance. And attendance will be calculated on the basis of percentage you appear in your given semester classes. 60% is minimum. Below 60, you will be not entitled to give the exam of semester 1. So 60% attendance is mandatory. So try to attend those classes whichever we are providing through online. Try to attend those classes regularly. And my portion and the books which I will suggest first of all is famous book Financial Accounting 1 by Soumya Mukherjee and Abhik Mukherjee. Of Oxford University Press. Or this is number 1, or number 2, you can go through FA One, Amitabh Basu of TD Publications. Or you can have another one, Financial Accounting 1, Gautam Chatterjee of Success Mantra Publication. Okay, of Success Mantra Publication. Any of these three books will do, will cover your syllabus. So I hope the basic classes it has been already been started. I will be dealing with the last portion, which will consist of insurance claim, consignment, accounting, sectional balancing, and self balancing. Okay, and sale on approval. This will be my covered portion, and it basically carries 30 marks. From this portion you can get 30 marks of question. So you see, it's an important portion, right? So these are the thing. This is a written paper, totally practical paper, problems, sums, as well as some theories will be there in your paper. So you have to study, you have to go through it thoroughly to understand this paper. So first of all, today, I hope it is clear. So I will start with insurance claim, this chapter, insurance claim at the top. I will start with this chapter. I will introduce few things regarding insurance claim. Then from my next class onwards, I will go on to do the sum in the same manner. So as this is the first class, I'll try to provide a clear-cut picture with you all regarding the chapters, regarding the syllabus. Most of you are still quite confused regarding which book we should follow, how to study, what are the procedures, how we can get the answers, and how we will solve the problems, what will be the mechanism of the college regarding the teaching in online. So you have lots and lots of queries, right? So on that basis, I just try to provide you a basic introduction regarding this class, and then I will move on to the portion of my study. First, I will start with insurance claim. Okay, insurance claim. I think most of you heard the term about insurance, right? You have heard about the term insurance in case of LIC, means Life Insurance Corporation, in case of maybe HDFC Life, Standard Life, and all these are the insurance famous companies. But here we will not talk about the life insurance of the person. We will rather discuss about the general insurances. So basically, why we do insurance? Because we are afraid of being our goods lost or damaged or destroyed, to protect that, to get further loss, we can get the claim from it, right? Like in case of insurance claim, how you can claim the insurance? You can claim the insurance on the basis of what you have been reserved as insured. Suppose I have a godown of garment, and I want to insure my products, maybe goods worth rupees 5 lakh, insured goods. Suddenly, in one day, fire occurred in the godown, and 7 lakhs goods were destroyed by fire. It is approximated. Maybe you did not record a proper stock register, and you are just assuming that it has destroyed more than rupees 5 lakh, and you are assuming. Then you, as you have been protected with insurance, the insurance company will come with you with an arbitrager. They will verify it actually what is the amount of loss has been destroyed due to fire. They will calculate it, and they will provide that on that basis. So means, although you have suffered a loss, but due to the insurance policy you have made, you can get the claims back. At least to some extent, you do not have to suffer a heavy loss, right? So that is the reason why we do insurance. We do insurance on that basis, basically, right? So basically, during this course of obviously regular operations, I have already mentioned that maybe accidents may take place or accident may occur. In that case, when accident occurs, you need to have been insured with certain products, and when you have been doing so, you need to assure your assets, you need to assure your equipments, buildings and all, or even in case of stock. For that reason, in order to cover the risk of losses suffered on destructions at business premises, basically an organization or an entity usually enters into an insurance policy suffered due to destruction, or usually entered into insurance policy with the insurance company. There may be of two types: insurance coverage for loss of stock as well as insurance coverage for loss of asset. One is insurance coverage due to loss of stock, and number two will be insurance coverage for loss of assets. Insurance coverage for loss of obviously fixed assets. Okay, fixed assets. These are the two types of insurance claim you can make in general insurance. I'm talking not about life. Okay, so in this chapter we will discuss insurance coverage on loss of stock first of all. After finishing the loss of stock, we will move on to insurance coverage for loss of fixed assets. Stock means the inventories, right? The inventories you need to secure, you need to register, and for that purpose you need to properly maintain the inventory records, right? And when you try to maintain the inventory records, how you can do so? You need to have a stock register. If there is a proper stock register in an office premises, you can have at least the knowledge before the fire occurred how much loss has been damaged. Or if you do not have the stock register, you can just ascertain it, you can just assume it that much of loss can happen due to fire destruction, right? So on the date of fire occurred, from that date you need to prepare a memorandum trading account. Why memorandum? Because when we do trading account, in class 12 you have studied, although from those who are coming from West Bengal board, they didn't appear the class 12 exam, but they have studied because they were full aware that the exam will happen, but due to the COVID-19 situation they can't attend the exam, and on the basis of previous exam marks you have been promoted. But those who are also coming from CBSE and ISC background students, they have particularly entered the exam, they have given the exam, and you all know regarding the trading account, PL account and the balance sheet. So trading account is where we record all the direct expenses and revenues, and indirect expenses and incomes are recorded in PL account. We all know that. So basically, when you calculate a memorandum trading account, that means you need to calculate a trading account before the expiry of the financial year. Means, suppose the financial year begins with, from April and ends at March. So it starts with April, and suddenly in the month of July the fire occurred. Means within a span of 3 to 4 months the fire occurs and damage has taken place in the factory, and you need to calculate what is the amount of loss you have been covered for, and that for that purpose you need to calculate memorandum trading account. Memorandum trading account means it is for a shorter span of time. You need to calculate that memorandum trading account, where you will get obviously the stocks opening and both the closing, sales will be there, purchase will be there, if there is any wages, if and only if, obviously, if in memorandum trading or in fire loss sometimes there has been a wages or not. And gross profit, you can calculate it. Sometimes you need to calculate the gross profit on the basis of sales. Means you can calculate the GP rate, gross profit rate. How can you calculate? GP by sales into 100, you can calculate the GP rate. On calculating the GP rate, you can easily calculate the gross profit. Gross profit, after calculating the gross profit, you have to calculate the GP rate or gross profit rate, which is gross profit by sales into 100. You know that from your ratio analysis. After that, if there is any salvage value, so the term stock salvage refers to the quantity of stock that the entity managed to save from the accident. Stock salvage. The term salvage is basically what you save. What you save from the accident or from the incident, right? From the incident. So this is basically the stock salvage, and you need to find out the stock salvage portion. Stock salvage means the amount saved. You need to deduct that amount saved, what the amount you have been suffering the loss, and from the loss you deduct the value of stock salvage. We will get the value of stock lost on the date of fire. That is also known as the gross claim. So basically, first of all, the format, I will provide you a format, which is you need to calculate memorandum trading account first. You need to calculate that. After calculating memorandum trading account, from there you will get gross profit or GP. From GP you need to calculate rate of GP. After doing so, suppose you know the amount of stock salvage. If you know the amount of stock salvage, then in that case you need to calculate another statement, which is statement showing stock due to fire or something, due to damage, anything. Okay, I'm lighting fire over here, or due to accident also. You can write due to accident also. Here you need to do a statement like particulars. I write particulars in short, PTCLS, but do not write like that in your exam also. Please do not write that. Please do not follow this method of writing shortcut particulars. This is for my good, for my explanation. I explain in that manner. And one amount rupees. Here you need to calculate the value of stock on the date of fire, on the date of accident also, date of accident, which is nothing but the closing stock, basically the closing stock of memorandum trading account. It is nothing but the closing stock of memorandum trading account. Okay, it is nothing but the closing stock of memorandum trading account. Now from there you need to deduct the salvage value. If you deduct the salvage, you will get value of stock loss, or value of stock loss, or whatever we can call at gross claim. It is basically gross claim. This is the format of doing. Okay, 1, 2 has been done. Now coming to the third part is that if there are any policy value which has been insured or not. If there is any policy value insured, we have to identify that. And if there is any average clause. Average clause is nothing. It is basically a special clause incorporated in the general insurance contract to encourage the insured to go for full insurance of the risk as against underinsurance. Full insurance as against underinsurance means suppose I stock my insurance of rupees 2 lakh, but my amount damaged rupees 5 lakh due to fire or due to accident. I will get the stock, I will get the compensation up to rupees 2 lakh. I cannot claim more than rupees 2 lakh I have been insured, because it has already been in the policy paper with the bond with the company that I registered my stock of goods of rupees 2 lakh. So I cannot claim from them that see मेरा तो 5 लाख का नुकसान हो गया, तो आप मुझे 5 लाख का कंपनसेशन दे दो. नहीं होगा. जितना स्टॉक आप कंसिडर करोगे फॉर रजिस्टरिंग अंडर वैल्यूएशन, उतना ही आपको मिल सकता है. मतलब उससे कम मिलेगा ऑब्वियसली. वो कैलकुलेट होगा, फिर इंक्वायरी होगा, कितना मिल सकता है वो उसका पॉलिसी में एक्सप्लेन किया होगा, फिर आपको वो मिल सकता है. अदरवाइज यू कैन नॉट क्लेम फॉर इट, राइट. सो ऑन दैट बेसिस एवरेज क्लॉज इज दैट basically it is basically another an insurance company tool to discourage the under insurance by the insured, discouraging this insurancing. So this is average clause, and you have to do it on the basis of average clause. You can calculate the net claim, means the value of stock. If there is any abnormal goods, you have to add it. If there is any stock value, you have to deduct it, and then we can get the actual stock. And if average clause is applicable, we will provide you the formula in my next class, which is net claim is equal to gross claim into policy value by value of stock on the date of fire. If you calculate that, you will get that. If when average clause is not applicable means, if it is applicable means if policy value is less than the value of stock of accident, means value of stock of accident suppose this, and if the policy value is less than that, then it is applicable. If the policy value is greater than this, then average clause is not applicable. I will explain that in my next class also. So do watch the video and do follow the class on a regular basis. I hope this is your introduction class. I hope somewhat it has been understood by you on a certain perspective. Thank you for attending the class. Have a nice day ahead.